So we saw a very large squeeze today on the S&P 500 after the initial rejection yesterday from the FOMC minutes as well as CPI, that mix. Remember from the Sunday video, I talked about the reversal to the upside based on Thursday's reversal date, which didn't end up happening. We saw that reversal to the upside. And then Wednesday, I had the other reversal date, or at least that range between Tuesday and Wednesday, where I saw a high likelihood we would have a rejection. We did get that rejection. However, today negated that cycle pattern. Typically, you'll see at least 3 days at the bare minimum for these cycles. In this case, that would require 3 days to the downside. This one squeezed a ton today and actually went over the current high of the move from back here on April 4th, as well as the high that we made yesterday on Wednesday. So this went completely above where both days were, and barring any extreme news tomorrow based on the bank earnings, as of now, this is a short-term bullish structure, which may seem counterintuitive to my thesis, because personally I've been bearish and still remain bearish, especially into the summer. However, just based on today's candle and the recent squeeze that we've seen so far, I am going to have to wait for some form of confirmation to attempt shorting this again, just because of today's candle. This wiped out a lot of shorts to the upside. Again, just based on yesterday, this was a bait candle. I talk about bear bait a lot. This was a form of a bear bait candle. We had a double top pattern. We had a large wick on yesterday's candle. Also, it was along with the cycle, so downside was highly likely, but the market decided to do something completely different. So we have to respect that and be versatile here, and just understand this is a bullish candle so far from today. If you look here, just based on the two red trend lines I have, this is the key structure that we're in right now. As of now, it is testing and attempting a breakout of this pattern. Now, just based on today's candle, I wouldn't confirm a breakout by any means, especially because we did not get above the 4,156 level. That's a very critical level that if it is breached, we will likely see a break above the current high from the February 2nd date. But I also want to make sure that tomorrow, if this were to be the case where we see a breakout of this pennant pattern that we're in right now, at least for the overall structure of this year, we do need to see weekly confirmation at a bare minimum above this level in order for that to be the case. Speaking of breakouts as well, Apple actually broke out today of its own trend line here. Again, this was supposedly a bearish structure to see a rejection off of this level. Again, the weekly hasn't closed yet. There's still potential for it to pull back and close on the trend line. So nothing has been officially confirmed yet. We still have another day of trading. However, as of today, this is a bullish breakout just based on the daily. Again, confirmation would have to be set in stone tomorrow based on the weekly candle. But again, coming from someone that has a bearish bias, and I definitely have been vocal about it lately, I cannot negate the technicals based on today, especially after the bait scenario we had from yesterday, based on the cycles, again, pointing to the downside, as well as just the technicals pointing to the downside yesterday. It completely ripped the other direction, which is typically characteristic of more upside afterwards. Again, confirmation based on the weekly. If that is to be the case, we do have bank earnings tomorrow, but still just making sure you guys understand the technicals at play here, especially because we have to be very quick to adhere to what the market is giving us after yesterday's reversal, or at least the reversal range we had that started off strong, but then was negated from today. So just keeping you guys updated on that. If we look over here to the dark pool levels, very critical to watch these levels, especially as we've moved up so far. We have 407.99 as the level for today. That is 2.4 billion in premium. So we are way above that at the close. It actually acted as support this morning, as you can see over here, just based on this graphic, and we did continue up a lot higher afterwards. So 2.4 billion, quite a bit throughout the day. Like to see over 2 to 3 billion to make it a meaningful print. If we go back here to Wednesday, you can also see we had over a billion. This was 1.9 billion at the 409.62 level. We've blown past both of these levels so far. So I would have liked to see this as a sign of distribution if we stayed below and adhered to the cycle date with further downside afterwards. But as of now, we are above it. So I do have to respect the fact that we are above both of these levels here. And it's unlikely, again, to be distribution if we stay above this, especially on the weekly close. And if you go back to previous days here, again, on Tuesday, we had over here that over 1 billion print again, 1.8 billion in premium for the 409.63 level. So quite a bit around the 407 to 410-ish level based on this week. We are above all three of these large prints throughout this week. So again, that's key to note. It's essential if you are bearish and do want to short, which is still my goal once confirmation is established. I would like to see as one of the forms of confirmation, a break below this range of 407 high-ish to that 409 high-ish level. If we do break below that, that can provide confirmation of further downside afterwards. So again, mark these levels on your charts. And if you look over here on Monday, a very similar thing. You can see here we had 2.4 billion at the 409.22 level. So again, 409 levels had a lot. Again, my assumption was that this was a form of distribution based on the sideways chop price action, and there's still potential that it was a form of distribution on the way up. We just have to wait to see price confirm the possibility of distribution in this range, which would mean a break back below especially the 409 level. Something else I'd like to mention here today, I did speak about bear bait earlier in the video here. As you can see, just based on QQQ, this is a classic bear bait scenario. A lot of bears most certainly piled on based on yesterday's daily close, because this looks very bearish. Just looking at the Wednesday candle, we broke back within this ascending pattern, or at least the previous ascending pattern, after breaking out before, which would mean that this would be a fake breakout if we did see continuation downwards, except for the fact we had a gap up today and it continued to the upside to break above the previous consolidation levels. So unless we can get back under and actually hold under, because as you can see here, just based on the 50-minute chart, we have broken below this level a few times now. It just hasn't been able to hold or find continuation downwards. So again, very critical in the future, if you are bearish, to see a break below this trend line, which is able to hold, first of all, especially for more than a day. A lot of these were gap downs that were a form of bear bait, continued to the upside afterwards. Each time, it was about 3 or 4 times so far. So a hold, especially for 2 daily candles, would be a telling sign of further downside afterwards when that does happen in the future. One of the main problems bears like myself, especially as of recently, have been running into is the weakness in the dollar. The dollar has just been hammered, especially after the course of the past month to 2 months or so. After reaching this supply zone up here, this box, we had a fake breakout, continued to the downside afterwards, and we did retest, as you can see here, this yellow trend line. It attempted to catch a bid, but the last 3 days have just been hammered again. Just continuous downside. There's potential for a double bottom around this range, but it's more likely the case that we will see a retest of this yellow line right here, which if you go back just based on the weekly chart, you can see this is a very critical trend line that did confirm the breakout that we received back in 2022 for the dollar. This starts all the way back in 2001, at least the pivot for the start of the trend line, and you can see that it drags across to this pivot over here in 2020, and it's likely that we do see a form of a retest because we did not receive an official form of retest whenever this bottom occurred last time. So it's likely that's where it's going next, which of course, if the dollar has potential for more downside left, that can prop up equities further. So as of now, do have to be careful. Still potential that it could find, again, a double bottom around this range, although this trend line is likely acting as a magnet because we did not touch it originally from back here. So it's likely to reach around here. You do have to be careful, especially if you are a bull, based on especially the technicals from today. Once we do reach this, if that is the case, because this could prompt a pretty sizable bounce for the dollar, which of course would be bad for equities overall. So just keep this in mind. Mark the pivots that I just showed you. It'll be a good reference point in the future, especially if we do reach it coming up here in the next couple weeks to months. Lastly, we did see the VIX get, again, hammered just like the dollar as of recently, especially today. We are back in the 17s, which is honestly pretty incredible considering we were over 30 not that long ago, just when the bank fiasco was occurring. Everybody was freaked out during that time period. It was above 30 for one of the days, March 13th to be exact. And you can see here, it's just been an absolute destruction of volatility since then, back into the 17s, which is pretty insane to think about. We did actually see potential for a onset of more VIX calls, at least more bullish bets on the VIX based on today. As you can see here, a lot more calls. And if you filter for above 500,000, we did see some decent sized bets. We haven't been seeing that much in terms of VIX call flow the past couple weeks, rightfully so as well, just because of how much it's been falling. So it is interesting to see an onset of calls. This is nothing insane, nothing that I would think, oh, we're going to see a bounce immediately, but it's still something that you can reference, especially if we start to see more and more in the next couple days, especially heading into that VIX expiration next week. But you can see here, 3.4 million in premium for the 24 strike, as well as 666,000 in premium for the 50 strike, which is certainly far out the money overall, and then 770K for the 23 strike. If you scroll down for just 100,000 in premium, you can see that there was more prints today, but still interesting to note. Definitely always good to reference VIX call flow because it can be a telltale sign of potential volatility, at least when we see an excessive amount in a consistent basis overall. But again, the VIX back in the 17s is very surprising so far. If you are fortunate enough to be a bull, especially after the last couple of weeks in terms of upside for the S&P 500, the NASDAQ, etc., you do have to be careful of the fact that we were back in the 17s, just because volatility this suppressed so far means you have to be careful of attempting to catch more upside. There's a potential ceiling, especially near where we are right now. Again, if you do want to go short, you do have to be careful just because of the squeeze we're seeing so far. So I'd recommend looking for some form of confirmation, kind of similar to what I was sharing in the dark pool segment of this video. But still, in terms of just bulls as well, you do have to be careful with volatility being this far down, especially after the history of every single time we've touched around these 17 levels. It has prompted a fairly large spike afterwards. We saw what happened here in March, as well as if you go back to previous time periods, the onset of this bear market back around these 17 levels, as well as in the 19 and 18 levels, it's prompted a pretty substantial spike afterwards. So again, do be careful, especially on both sides right here. And other than that though, appreciate you guys watching this video, and I will see you guys next time on Sunday.